All right. Welcome, welcome, welcome. I am Andrew LeBaron of Motel to Apartment Conversions, and we got some really cool updates for everyone today. We're going to discuss our current projects right now, some exciting things coming up. We're going to talk about Parkrise, and we're going to answer questions. Wanted to invite you, if you're watching this, I want to know where you're watching this from. Are you watching this from YouTube? Are you watching this from LinkedIn, Facebook? Let me know where you're tuning in from. That gives us data so we know where to broadcast more. Also, if you have any questions whatsoever, please post it in the chat wherever you're watching this. Simultaneously, I'd like to know what you do. If you could put your name down and say, hey, I'm Andrew, I convert motels into apartments, or I convert motels and hotels into apartments. I'd love to hear what you do. Post it inside of the chat. We want to know more about you, your market, what's working, what's not working. And again, ask any question you have. I know it's a strange idea to convert hotels into apartment style buildings, but it's what we do. It's what we dedicate our whole business on. And we've been doing this for a little bit, and it's exciting. We have a long road ahead of us, and some exciting opportunities that lie before us. We have Jacob joining us. He's my co-founder. And hey, how you doing, man?
Good. How are you? How's everyone doing here?
Real good, real good. Just inviting everyone to jump into the chat if they have questions, or if they want to know more about the motel to apartment conversion process. We get a lot of people that jump on that kind of want to know how we do it, what we do, but I let them know we're also going to give them updates on studios on 4th or on the Brownsville property, so on and so forth.
Awesome. Great. Let's jump into it.
Sounds good, guys. As I mentioned before, Andrew LeBaron, been in real estate for a while. If you have seen these presentations prior, you know that we cover some of the same things, but wanted to give a soft intro to each one of our members. Jacob is my business partner. He's on here as well. A third partner is Richard Wilson. He's the president of Family Office Club. And we've been at this for about 2 years. And we acquire discounted hotels in growing areas. We convert them into apartments. Some of the struggles that we notice in the multifamily. Actually, let me start with the question. Why do you guys do this? Well, the reason why we do this is because we see a major opportunity, a big blue ocean opportunity before us. A lot of struggles in the multifamily industry where it's highly competitive, it's slimmer margins, low equity, high investor risk right now, especially with floating rates, so on and so forth. Hospitality challenges, you're seeing higher vacancy, slimmer margins, and a lot of operation complexity, a lot of stuff happening, a lot of moving parts, and inevitably is higher risk. What we've been able to find out is the motel to apartment conversion structure allows us to have an apartment-like stability with a hospitality margin, or large NOI, net operating income, more equity upside. It's simpler because we're not strictly a hotel, and it's a much safer investment.
Yeah, absolutely. And so these are some statistics here, and this is based on the markets that we're in. We have 2 projects running right now, one in Brownsville, Texas, and one in McAllen, Texas. And so in those markets, the average multifamily acquisition, we're just going to go down the line here on what a multifamily acquisition is, what a hospitality acquisition is, and then how we compare. And so obviously, if you go to the top line, the average cost per unit, we're getting them at a much more discounted price. And this is all in. This is the purchase price and the renovation cost. So for a fully stabilized property, we're averaging about $56,000 a door, a room. And then for multifamily and hospitality, significantly higher than that. And so we're getting in at a great discount, lots of equity in the property. Average occupancy, you can see multifamily. The advantage of multifamily is that you lease it up and you have 90% occupancy, and it's stable. Hospitality fluctuates a little bit more. And like Andrew said, we're right in the middle there. We are a flexible hybrid, short-term and long-term stay. And we'll go through a couple of statistics on how one of our properties is performing that way. But we have that added stability of multifamily with the potential upside of hospitality. Now, you look at operating expenses, multifamily, lower operating expenses around the 40% mark if you're operating efficiently. And hospitality, you're more at the 63% mark. And so what that means is for every dollar that comes in, 63 cents of that dollar is going towards expenses. And so again, we have that middle ground where our operating expenses are not they're not as high as hospitality, and they're competitive with multifamily. And so we're about that 49% range currently. And then your average NOI, this is average NOI per room. So for multifamily, the difference between multifamily and hospitality is that you don't have that added rent increase. You could charge a premium for hospitality, even at $50 a night, which is a super cheap rate. You know, you're looking at a higher rent than a typical multifamily, which is $850 or $1,000 for the area. So less upside for income and NOI for multifamily, more upside for hospitality, but again, more risk because the operating expenses and occupancy is going to vary. But we have our average NOI, $759 per room, and that is a combination of higher occupancy than multifamily, than hospitality, and also higher income than multifamily. So we kind of have the best of both worlds. And so our yield on cost, that's kind of the big number that we're looking at here. We are, you know, almost double of what hospitality is, and double pretty much of what multifamily is. And so the yield on cost is extremely competitive, and that's why we do what we do. The huge part of our business model is to get a highly discounted asset and then run it very efficiently. And so Andrew mentioned this, the blue ocean market opportunity that we have. You look at the commercial real estate market, it's extremely crowded and competitive, $20 trillion industry. And then you narrow that down to the hospitality. So there's multifamily, there's office, commercial space, and then you have hospitality, which is 1.6 trillion. And then we've identified $320 billion of market space that is hospitality suitable for conversion. So this is in Sunbelt areas, Sunbelt states. These are hotels that match our description of what we're looking for. And so we have an addressable market size of 320 billion. Now, on average, the value of the equity value that we're injecting into these properties, the value that's boosted after our conversion, is typically over 100% with what we're projecting and what we're seeing. And so we believe that the total market opportunity is closer to the $700 billion range. And so that's how we break down the numbers there.
We love this project. Thank you, Jacob. It is a blue ocean opportunity. We have sky's the limit with this niche. The McAllen project, known as Studios on 4th, it's doing really well. We are a exact hybrid of what we just mentioned. We are the 22. It's been an 18-month reno, stabilization, and refinance. So pretty quicker than most projects that you're probably used to seeing. It's just a $1.6 million project cost, much lower than your typical large-scale multifamily out there. And the value is at $2.3 million. Again, just a reminder, we bought this for 60 grand down, 0% interest. Okay, no interest, no payments. We didn't pay a dime every single month. And we set up a balloon for 18 months. So just a home run term sheet with the seller on a seller finance. It's looking to be a 1.5 to 1.9x equity multiple, 15 to 21% IRR. Annual rate of return is 16 to 19%, and the return on 100K is 50 to 90K. We're actually working right now very close with a total refinance that's going to help us boost help us get some returns for investors and get back to new projects. So we're just about there. Pretty exciting times.
Yeah, and this property is actually listed. We're pursuing the long-term refinance, but we actually got an offer for $2.3 million on the property. Somebody wants to buy it for $2.3 million. We believe that it's valued closer to $2.6 million. we do have a broker's opinion of value of 2.6 million, and that's what it's listed for. We did pass on the offer for 2.3 million. We're trying to negotiate higher, but the long-term vision is to refinance and let the property produce cash flows and income and have it appreciate and eventually get up to the 2.6 million, which will give us these returns. It'll actually give us higher than these returns. Yeah, and you can see some of the befores and afters here. Is dumpy motel before, not much income coming in, and you see here that we transformed it into an apartment style studio, a studio apartment essentially. L-shaped countertops, gas stove, appliances, all new stainless steel, fridge, microwave, dishwasher. It has the works, and so it's a very attractive and desirable looking apartment complex now in a great location in McAllen. And so it's been running for a little under 3 months, and we'll go through some of the numbers here. So our occupancy target, this is from the very beginning of when we started the project. This is what we wanted to achieve in May 2024, June 2024, July 2024. We had delays with construction, renovation, and so the 23% in May was actually our very first month leasing this up. And so it was very good. I mean, we're growing every month. By July, this is a combination of long-term and short-term. By July, we have another week here. We should be over 40%, close to 45% occupancy. And so we're growing pretty quickly. We project now in just a few more months, we should be able to hit that 80% target. And so you look at our long-term occupancy, there's 9 long-term tenants out of 28 units, so 32% of guests of total possible rooms are actually long-term guests. Now, you can see some of these have 6-month leases, some of these have year leases, others are paying month to month. But these are long-term people, they're locals. A lot of people ask who our target demographic is. Well, for long-term, we have school teachers, we have local restaurant workers, we have truck drivers, we have people who are in the area working remotely from home. And so these are long-term guests who plan to stay indefinitely, and they're either paying monthly or they're in a long-term contract with us. Now, for short-term occupancy, this is just over the last 2 weeks here. 43% of our revenue is coming from short-term, and so we're ramping up right now. We're starting to do more advertising on our Facebook, starting to optimize our website. Average rent is only $60 a day, so we'll be able to increase that. But we're running a true short-term and long-term hybrid. So you look at our income, it's steadily increasing month over month. Again, we have another week or so in July, so should get the income even higher. NOI, also, we're looking at an increase every month, and we'll just continue to grow that way. But all signs point to this project being very successful. It's very reassuring that we have already gotten an offer close to what we're asking for it. So good news all around.
Awesome, Jacob. Great job. Yeah, it's trending up. I love seeing the graphs just go this way. So pretty exciting that it's going upwards. We're going to discuss Viva Studios in Brownsville. Some really cool updates for y'all. We visited the property just this last week, and we are about to partner with some excellent help. Need a little bit of extra help with this project, and so far this group is just very reputable. They actually do something similar. We're about to partner with a company called Waltz Construction. We bought this deal for a really, really good rate per room. We acquired it just last year, and it's a 24-month reno and stabilization plus refi. It's a $4.6 million project cost, and it's gonna be around a 2x in valuation when we're done. So the return on investment is $40,000 to $70,000. Brownsville's growing. If you're not familiar with Brownsville, it's where SpaceX is at. It's where Elon just announced that they're going to move the SpaceX headquarters there from California, not just the launch site, but now a headquarters there. We're seeing a uranium plant just north of us that's being built as we speak. And then LNG gas is also being installed in that Rio Grande Valley corridor. So a lot of good market news in the RGV. Here's some updates of where we've been recently. We've installed some flooring. We've opened up wet walls. We're ready for some inspections. We're waiting on a few more permits. And we've been able to construct a lot of the vanities, shelving units for these rooms. We have to be very creative on storage space. So we were able to design additional storage space because we're only working with 300 square feet. When you add a kitchen and other amenities to it, it limits your space, but we're able to add some shelving, and we have it stored here in some of the hallways ready to be installed. And we built some ads, and we're actually filling up while we construct. We have 2 wings. So the back side of the building is being occupied with longer term folks. The front side is under construction. And this is just a generic ad that we built, and it's helped us fill up and maintain cash flows in the back. If you follow us and you won't, or if you don't follow us and you want to be a part of understanding the financials, let us know. Every single week, we update the financials on this building as per occupancy, income, NOI, so on and so forth. 40 rooms available, as I mentioned, 40 rooms under renovation. The restaurant is still running. That restaurant's been there for 20 plus years. It fills up every day. And they're paying their lease. They're happy to be there. Timeline to finish is Q4. I'm going to say Q4, Q1 of 2025, but it's going to be in that range. Something else too I didn't mention. There is a building being constructed as we speak right next door. Brand new build, commercial, large, A-class restaurant, which is awesome. In fact, they've asked us if we would take down the wooden fence that separates us to create a little more unity between the 2 buildings. So it could be really helpful. But yeah, exciting things are happening with Viva Studios.
Awesome. So I think that's all we had presented for today. We are actively looking at new projects at this point. So I don't know if we want to kind of give a timeline on when we think we can acquire one. I mean, we would like to acquire a project before the end of this year, most definitely. And we're looking in the similar markets we're looking in Dallas, San Antonio. We have a good property that we're looking at in Tucson, right? And then another one in Brownsville.
Yeah, we want to be in markets where we see obvious growth, imminent growth. And within this year, we should target, contract, and pursue one more property. Thanks for joining us today, everyone. If you have questions, send it to us. You could send us an email, info@motelstoapartments.com. You can always reach out to us on Facebook, on YouTube. You can leave a comment. If you want to get involved, let us know. We'd love to have you.
Awesome. Thanks, everyone.
Thanks, guys. Have a good one.
Have a good one.